Hello, this is Squander Invest. Today we'll be covering a few things over here. So the stock market is rallying hard because Trump basically just capitulated, and we'll be talking about some of my holdings and buys that I've done over the past few weeks and months or so, as the stock market has corrected around 20% from all-time highs. So over here, the stock market is rallying extremely hard. So in the past few minutes or so, around 30 minutes or so, the stock market is up around 8%. This is because Trump has basically capitulated. He is delaying all his different tariffs on all the different countries, and he is basically hitting China harder with a 125% tariff. So from my perspective, I think this is overall bullish for the stock market and the economy as a whole, because what Trump is basically doing is he's trying to rally everyone against the Chinese people, against the Chinese government, and overall this is extremely bullish for Trump. So for Trump over here, he is dropping all the tariffs to 10%, basically 10% universal tariffs for all the different countries, and he's hitting China with 125% tariffs. Trump is trying to get a deal. He's trying to hit everyone strong so that everyone knows what he can do, and then after that, he just starts negotiating downwards and coming to an equal level with all these different countries, which was an overall extremely smart move for this Trump administration over here, because number one, the US economy won't suffer. Number two, the Chinese economy might suffer because the Chinese people are extremely reliant on the exports to the US. And if those exports, the volume start to drop because of all these different tariffs, then it might be detrimental to their country for sure. And what they did yesterday was they sold off all the US bonds. They sold off a lot of the US bonds, sort of like as a retaliation to the US, and that caused the devaluation of the yuan, which is bad for the country because it leads to capital sell-off, capital being sort of like sucked out of their economy. So I think overall for this piece of news over here, it is bullish for the stock market. We could see the stock market rallying for a few more days. And yeah, overall, this is extremely bullish. As for the next segment over here, I'll be talking about some of the stocks that I bought over the past few weeks and months or so, and some of my core positions in my portfolio. So the first stock is Google. Google is extremely cheap. Even after this rally today, it is still trading at only a 19 times earnings. So for this company over here, it is a company that is growing at around 35% year on year in terms of the net income. And there was no reason for Google to trade all the way down to a 16 times earnings. In fact, I added, even when it was at around $139, it was just ridiculous at that price already, although it was already quite a lumpy chunk of my portfolio already. It is currently around 12% of my entire portfolio. So for Google over here, I think even after today's jump, it is still presenting a very good opportunity to buy, because my fair value for Google is around $190 to $200, and yeah, that's around a 20% margin of safety from 190 intrinsic value over here. So for Google, I think this company is incredible. I would buy into it if I don't have a position yet, even after today's jump. And yeah, I'll be holding this one for quite a while because the valuation just simply doesn't make sense. It deserves around a 24 times earnings. And yeah, there's no reason for this stock to trade down all the way until 17 times earnings a few days ago. Next stock is Amazon. So Amazon is another company that I've been adding heavily into my portfolio over the past few weeks as it continually sold off. So Amazon over here, it was a company that was trading at around 30 times earnings. 30 times earnings for this company just before this move today was just absurd. So for Amazon over here, it is a company that is exploding in terms of earnings. Earnings grew by around 94% last year, and I do expect them to continue improving their earnings over the next few years as their margins expand. As Amazon over here, I do expect them to continue improving their margins over time using AI to improve efficiency. And if you were to just look at the numbers, even a 1% increase in their margins will do them a lot in terms of the net income growth. So for Amazon over here, even after today's jump, I think it is still trading at slightly around fair value. It is a quality company trading at around 33 times earnings and still down around I think 20% from all-time highs. So for me, even after today's jump, Amazon is still a buy, and I've added quite a heavy amount into Amazon already. So yeah, I was hoping for more downside all the way until $150, where I've added and made it my full position, but it didn't get there. So yeah, I'll just take it as it is. Next stock that I bought quite heavily as well over the past few months is ASML. So ASML over here, yeah, there was no reason for this stock to trade at around 28 times earnings. So a few days ago, it was trading at around 28 times earnings, around $575. That was where I made ASML my full position. It is currently now around 10% of my portfolio. And so for ASML over here, it is a monopoly. It is a company that is operating in a monopoly in your EV segment, and it holds 80% of the market share in the EV segment. There was no reason for this stock to trade all the way down to a 28 times earnings. for the quality of this business, for the growth of this business, and for the buybacks that they're having this year as well. So for ASML, I calculated the buyback yield this year. The buyback yield this year is projected to be around 4%. So that is already a 4 to 5% addition to their EPS growth already. So if they can grow their revenue by around 10%, grow their net income by around 12 to 14%, that is a 20% EPS growth just this year alone. So I think for ASML, even after today's jump, it is still a company. It is a quality company for a long-term hold. I don't think this AI story is dead yet, although people have stopped talking about it over the past few days. So ASML is the third company in my portfolio. Next company is S&P Global. S&P Global is also one that I've been heavily adding into as well over the past few months. So I think S&P Global over here, this company is still trading at a decent valuation. My fair value for S&P Global is around $524, and that is where I initially started my position. I started my position at around $490, and I averaged down all the way. So for S&P Global over here, it is a quality business operating in a duopoly with Moody's. And for this company over here, there's a clear tailwind for this business because your debt wall is projected to increase all the way until 2028. So you can expect around mid-teens to high-teens net income growth over the next few years, all the way until 2028, and then it will start tapering off from there. But for this business, it is currently trading at a very attractive valuation of 24 times price to free cash flow. And for a quality business like S&P Global, I think it deserves around a 30 times price to free cash flow, not 24 times price to free cash flow. And that's why I've added quite heavily into this stock over the past few weeks. So this is one that you can look at. And even after today's jump as well, this company is a quality business that will stay for the next 50 years for sure, unless the rule book changes. Next one is MasterCard and Visa. So MasterCard and Visa is actually MasterCard and Visa, I would say, are the highest quality business in the entire world because they do nothing. All they do is they just basically take a portion of every single purchase that people make. So for MasterCard over here, it is trading at around a 36 times earnings. I think it is around fair value today, around $500. That was my fair value for MasterCard, and that was where I started my own position. I also bought into Visa as well. I bought into Visa at around $280 last year, and I just added into it recently as well at around $300. So for Visa over here and MasterCard, there are two companies that are growing at around 10% and 12% in terms of their revenue growth every single year. And if you're to just add their buybacks, add all the dividends that they give out, that is easily a 15% that you can get from all these two companies over here just from its fundamentals already, excluding any form of multiple expansion over here. So for these two businesses, I think they're high quality businesses, and that's why I added to them even when the market sold off and even as the market sold off, because these two businesses, they are extremely stable. Even if we were to go into a recession, I can see these two companies coming out of it stronger, coming out of it with a greater market share and eating up all the different small fishes in the same pot. Next company is MSCI. So MSCI over here, it is operating in sort of like a duopoly or an oligopoly. So for MSCI, what they do is they basically license out their indices, and this company is trading at a decent valuation as well, a 30 times forward earnings, and based on a price to free cash flow basis, this company is trading at around a 26 to 27 times price to free cash flow. For this company over here, they basically have no reinvestment. All they do is they just sit there like S&P Global and Moody's. They sit there and then they license out their indices because people buy the ETF based on the MSCI branding. And that's why this company over here is a quality business with basically no reinvestment risk, no capex risk, nothing. And that's why I've been adding heavily into it as well. It is currently around 4% of my portfolio. Wanted to make it around 7%, but yeah, the rally's gone already. I was hoping to add at around $480 followed by $440, but it didn't get that. So MSCI over here is a quality business. It is a quality business that I can see going on for maybe 10 plus years because people will start moving from active investing to passive investing. And when we have sell-offs like this, people get risk off and then they'll start selling all the individual stocks and then they'll move to ETFs as well. And that is bullish for MSCI. Last stock that I'm quite heavily concentrated in as well is Microsoft. So Microsoft is an extremely multi business. This is just a quality business, and I do believe that Microsoft deserves a premium valuation as compared to all your different other stocks. So for this company over here, it is a company that grew revenue in 2022 as well when we had a sell-off, and in 2020 as well when we had a sell-off. So this is just an extremely stable business that survived your 08 financial crisis, your dot-com bubble, your all your different crises from back in the day as well. So for Microsoft over here, it's just a durable business, and that's why I've heavily added into it. For my fair value for Microsoft is around $380 to around $400. So currently trading at around fair value. I will continue adding to this one if it continually sells off. Hopefully it go into some form of economic slowdown so that I can add to all these positions. And this is my 7 to 8 list of stocks over here that I'm quite heavily concentrated in. Other than that, I do hold some Singaporean stocks as well, mainly the REITs and some of the airlines and banks as well. But yeah, these are my high conviction stocks that I have over here. Hopefully you guys have found this one useful and invest safe.